In today's midweek outlook, we're discussing the DXY, the euro, the pound, and also gold. Now, before we get started, guys, if you want to join us in VIP for real-time market updates, seeing my trades live, daily trade setups, VIP-only videos, and also the full course, be sure to check out the link in the description of this video, or if you're on the website, click on that Join VIP link. All right, starting with the DXY here, daily time frame. We talked about this recently over the weekend, but this was the failure at 99.35. So you can see the June highs back here. This was a failed breakout following those NFP numbers. And this was the resistance area back here that I was discussing. This was really what I was ideally looking for this week. However, you can see the DXY didn't quite make it there. And now we're getting the break below this support area around 98.50. So this is going to flip to new resistance. Okay, so the highs back here, lows through here. This is going to flip to resistance. And we have support down here around 97.70. Now, one thing that could continue to draw the DXY lower here on Thursday is these imbalances down here that we've discussed around 97.74 and 97.93. So following this move higher, we did see very little trading through this area. So we have these imbalances down here just above that confluence of support in this region. So this is going to be a really critical area for the US dollar index. And like I mentioned to VIP members, I made a VIP only video earlier today on a bunch of markets, and one of them here was the DXY. And one thing we discussed there was the fact that even though the DXY is relatively weak right now, you've got to be careful because on the monthly, you can see where this right here is technically a bullish engulfing candle. Now, whether this confirms in the coming months is yet to be seen. However, obviously, a relatively bullish looking candle here from the DXY. So even though it is bearish right now, guys, you've got to be really careful, especially as it comes down here into 97.70. Now, there is a chance we could see a move down here toward the lows, but really, I think 97.70 is going to be the area to watch for a potential bounce from the US dollar. All right, so moving on here, guys, we have the EURUSD, which is approaching that March trend line that it broke down from back here. So we discussed this at the time, and what I mentioned here was the fact that there was really no fight from buyers on this candle, on this breakdown. And a lot of times when you see this, you do get a return to that area. And the reason for that is because of these imbalances that form. So looking at the 30-minute time frame, we've discussed all of this in recent videos, including the weekly forecast. But you can see that back here on the 30-minute, the euro moves so quickly through these areas that we do have these imbalances that formed. Okay, so back here in this area, and then also one back here, which was satisfied so far this week at 116.16. Okay, so these areas, guys, often serve as a magnet, so to speak, for a market. And they can also serve as support or resistance. Okay, so with that in mind, we do have the EURUSD hitting some resistance through here, right around 116.65 or thereabouts, and we have support down here at that previous single print down here around 116.16. Now, the level that the euro has to hold above now is this region through here around 115.85. So you can see very clearly we did get the break above. So this area down here is going to flip to new support for the euro. Okay, so resistance for the euro back here in this area, you can see this pocket of consolidation. We have these highs through here, also this pocket through here, and then we have support down there in this region. Okay, so resistance up here, support down here. I do think, though, looking at this chart, looking at the DXY, that a move up here into those single prints is, likely here over the coming days. Now, especially this one through here. I don't know if we're going to see the euro get high enough to tag this one up here around 117.36. But I do think that 117.06 is going to be in the cards here off of this low over the coming days. But probably first, considering the fact that the market is hitting some resistance here following that close on Wednesday, I do think that a pullback first is in order. Whether we need to see the market come back here or all the way back here toward these highs is obviously yet to be seen. But I do think that a pullback into this region could trigger that move higher up there toward 117.06. All right, so moving on to the pound, also, kind of similar to the euro here, we did get the pound actually tagging this area down here. So we talked about these unfinished auctions back here, and a lot of times these get swept. And you can see with that exact scenario occurred through here. And we also saw the pound reclaim the bottom of this channel in the 4 hour. So if you'll notice, off of these highs up here, okay, we've got this low back here in this area. In fact, this shows up probably better on the linear chart here. Where you can see that the pound actually broke below this back here. So we had the break below, and you can see it reclaimed it on this candle and the retest as new support right there on that candle. So really nice setup there for a bullish reclaim. And that exposed these imbalances up here that we discussed recently. So there are imbalances here up toward above 133.80 that could come into play here over the next 24 hours. Okay, so for the pound here, you can see that it is approaching resistance, very similar to the euro. where we have these lows from back here, and we've also got this high. So just above that, we have those single prints. This is going to be key resistance for the pound. And then we have the top of that channel that could also come into play if we see the DXY into 97.70, okay? So very similar to the euro, we've got resistance just above current levels, and then support is going to be down here at these recent highs. Okay, so right in that 133 area, that's going to be the support area to watch, unless we see this area tagged first, and then we could get a larger rotation lower. But like I said, I do like the idea of the DXY down there into 97.70, following the breakdown below this area, flipping back the DXY below this area around 98.50. Okay, so with the DXY, guys, as long as we're below here on the high time frames, like I said, I do think we're going to see a move down there toward 97.70. At least that's the likely scenario. Okay, so wrapping up here with gold, we discussed this one recently this week. And the bottom line, guys, is that this is a sideways market. And until we see a breakout from gold, it's best to treat it as a sideways market, meaning that you're looking for, shorts up here in this area and longs down here off of these lows. Okay, so that's really the bottom line. I think that this price action through here, once we see the market get here in this mid-range, this is really a no trade zone in my opinion, right? You're looking at the extremes here, resistance up here in this area and a support down here. Now, a couple of things that we did discuss recently is the fact that we have this 34.04 imbalance up here and we have the 33.05 imbalance down here. Now, neither of these have been tagged. This one, gold is obviously getting very close to, right? Now, we do have an intraday ascending channel that could come into play here and trigger that move higher. Okay, so you can see that off of these recent lows through here, we do have gold moving within this channel, and at the top of this channel could come in around that single print around 34.04. However, once we get up here in this area, guys, I think that's going to be the time, if we see gold tag this region, I think that's going to be the time to start looking for some potential shorts, especially if we see the DXY bounce from 97.70. Okay, so you can see how all of this ties together, given the fact that gold and the US dollar tend to move inversely to one another. Now, from there, okay, let's say that we do get the move up here toward this imbalance back here, potentially these lows. So this pocket of resistance over the coming days. If we see this over the coming days, then you've got that open sell side imbalance around 33.05 following this move higher, which is still open for business. Okay, so potentially the move, higher from these areas down here, if this holds, guys. I mean, there's obviously no guarantee, but if it does, then potentially the move up here toward 34.04, at which time, like I said, bearish price action from this area could trigger that move lower, knowing that this is a range-bound market, right? It has been ever since April. And then we've got that sell side imbalance down there around 33.05. All right. So, as I've said recently, guys, I do think that this is best traded as a ranging market, which is what it is. A lot of times when you see a market, moving higher this aggressively, everybody thinks, okay, this is the one, this is the breakout. And they start targeting, levels above these multi-month highs. And I always think that that's the wrong approach because, again, a market is range bound like this until proven otherwise. So as long as we're here, below these highs down here and above these lows, this is best treated as a ranging market. All right, guys, that's it for today's video. I hope it helped. If it did, be sure to subscribe to the channel, hit that like button, and also join us in VIP. Check out the link in the description of this video. Trade well out there, and I will talk to you again tomorrow.